My name is Allison. I am the manager of on-site advisory here at KWB Accountants and Advisors. I have been working with KWB now for just over 3 years, so about 3.5 years. Also worked with them way back in the early 2000s when I was a student. Worked a lot of places in between, mostly in public practice, and came back to join them a couple of years ago. So I've worked with a lot of clients over my, almost over 20-year career now. I hate saying that out loud, but I love helping our clients solve problems and make progress towards their goals. And that's my main role here at KWB now as the manager of on-site advisory services. So today we're going to take a look at how to build a successful future with budgeting and forecasting. Building a roadmap for your business with these tools can really help ensure that you're getting to where you want to go while doing all that you can to avoid any road bumps or detours that inevitably come along the way. So here's a quick rundown of what we're going to go over today. I will give you a quick introduction to KWB and how on-site advisory fits in with the overall mission at the firm. We'll discuss the differences between working in your business and working on your business, which is kind of a key concept to understanding all of this. You'll learn about your business roadmap, why it's important, and why it's even something you should spend time focusing on in your busy day. We'll talk about budgeting and forecasting, what they are, what the difference between the two is, and how each of those tools can help you look a little bit into the future and start to build a bit of a crystal ball. It's never going to be an exact prediction of the future, but it's your best guess. And then at the end, we will have lots of time to answer questions. So as I go, if you think of something that you want to ask, we have a pretty small group today, so you can just maybe raise your hand in the Zoom, and Samantha will help me keep an eye on that because I can't see the chat as I'm talking, but feel free Samantha, to interrupt me if someone has a relevant question and wants to stop and chat. And then I will also circle back at the end and answer any questions that you have. So for those of you that are not super familiar with KWB and who we are and what we do, we are celebrating nearly 29 years in the Edmonton area. We serve our clients wherever they are. So we don't just work with clients in the Edmonton area. We work with lots of clients up north in Yellowknife and the Northwest Territories. We work with clients kind of across Canada. We really embrace technology like Zoom to be able to enable us to work with clients wherever they are. And kind of gone are the days where you need to bring your box full of paper receipts into the office and sit across the desk from us. So our solutions include bookkeeping support, financial statements and taxes, of course, and then integrated planning for the future, which is what my focus is with on-site advisory. Our mission at KWB is to provide you with great advice that improves your business, simplifies your accounting experience, and helps you to reach your goals. So over the years, over those 29 years, we've worked with a lot of different business owners, and we've found overwhelmingly that they really need support that goes beyond simply helping them prepare their financial statements at year end, and then, of course, the tax return that has to get filed each year. So with those needs in mind, we've developed a unique journey, a fairly unique, we feel, journey for our clients that we work with. So first off, we focus on simplifying your accounting experience. We've had lots and lots and lots and lots of clients over the years that have come to us with out-of-date books, inaccurate books, because they're just really, as business owners, overwhelmed by that bookkeeping process, and they're either trying to outsource it to somebody that they think knows what they're doing. And, bookkeepers come in many different flavors and sizes and colors. So unfortunately, there's not a lot of regulation in that space, and some of them are fantastic and some of them may not be so fantastic. And sometimes those cheaper alternatives or less expensive alternatives end up making a fairly complex puzzle that needs to be sorted out. So whether it's just, being overwhelmed by the process, or hiring someone to help them that doesn't really deliver what they've promised. We've had lots of clients come to us with out of date or inaccurate books. So we really take a step back and focus on sorting that out at the base level, because your bookkeeping is the foundation for all of the work that we're going to do, including your historical tax returns and financial statements, but also, and more importantly, in my opinion, with my role now, is it's going to become the basis for all of your day-to-day business decisions. And you need it to be up to date, most importantly, and accurate, of course, in order to be having information to make those decisions based on that is accurate and timely. So that's a real focus for us here, and we're pretty passionate about it. So that's kind of the first step that in the journey that we work on with our clients, is to get that sorted out. And whether that means working with the bookkeeper that they have already in place. We work with many, many external bookkeepers. We love to have great relationships with good bookkeepers. We also have a team of internal bookkeepers that we can utilize to help with this kind of stage of the process. So we can work with our clients on kind of any capacity. We can do it for them. We can work with their team to help get it to the standard that we want it to be, or we're happy to have clients that have a strong bookkeeper in-house already to work with them in that capacity. So the next step in our journey is that we try to help improve our clients' businesses by ensuring that we're not only looking at their financial history, but we're starting to have discussions with you about the future as well. So where do you want to be in 3, 5, or even 10 or 20 years down the road? And how can we help support you in that journey and help you get there? We don't only focus on your business, but we really try to spend some time getting to know you and what's important to you in every aspect of your life. And then we factor that into that knowledge that we've gained in that process into our integrated tax planning and comprehensive year-end accounting packages. And finally, the last step in the journey is we want to help our clients to really achieve those goals. So once we've learned where it is they want to go, we want to start to talk about how we're going to help them get there. So learning to use that financial information, not only to file your taxes and look in the rearview mirror all the time, but how are we going to work together to move towards those goals? So we can work with clients on a regular rhythm, whatever the right rhythm is for you, to start to help you really understand your financial information and how you can be using it moving forward. So I talked a little bit before about working in your business versus working on your business. This is a really important concept to understand when we're talking about on-site advisory and what we do. So we really, our focus with on-site advisory is to help you shift your focus from working in your business to starting to take a step back and work on your business a little bit in a regular routine. This allows you to focus on the future and be a lot more strategic about running your business. So when you're working in your business, you're working on the day-to-day operational tasks and activities that are necessary to keep the business running smoothly. This could involve serving customers, managing employees, handling administrative tasks, etc. When you're working in your business, you're primarily focused on the immediate tasks at hand and generating income for the present. So you're working on today's income. When you're working on your business, you're taking a step back from those daily operational tasks and you're focusing more on things like strategic planning, growth, and long-term development. This involves analyzing the overall business direction, setting those goals, refining processes, improving systems, and implementing strategies to position the business for future success. When you're working on your business, you're focused on building a sustainable and profitable enterprise that generates income not only today, but also in the future. So that's why we say when you're working on your business, you're working on tomorrow's income. Now, both of these types of work are really, really important. It's not a case of good work versus bad work. You can imagine if you stopped completely working in your business, things would fall apart quite quickly. So both of these types of work are really vital to your success. It's about finding the balance, right? The day-to-day tasks. Sorry? Okay. Sorry. So the day-to-day tasks of working in your business are really a lot easier to delegate to somebody else, a member of your team, than the more strategic tasks of working on your business. Those things are almost impossible to hand off to anyone else that's not, immediately involved in the decision-making of your business. And so because that needs to be you mostly, or you or your, business partners, it's really, really important that you get into a regular rhythm of focusing on that type of work. So specifically today, we're here to talk about a business roadmap and how you can use budgeting and forecasting to build out a bit of a roadmap into the future. This is one of the really important ways that you can spend time working on your business. You're going to plan not only where you want to go, but how you're planning to get there. So it will allow you to have a little bit, like I said, of a crystal ball into the future and start to anticipate some of those difficulties that you inevitably will encounter along the way and help you make the best decisions for how to navigate that path. Using budgeting and forecasting, you'll start to build that plan out, and you'll plan for your business profits and your cash flows. You'll do it on the short term or the long term, depending on your unique situation and what it is you're trying to plan for. So why is it important to spend time on this at all? A business roadmap will help you decide on which path is the best path for you. You can start to look at some different alternatives to help make those decisions. It's going to provide you a meaningful way after you're done the exercise to track your progress in the future and compare what's really happening to what you thought would happen at the time that you did this, and allow you in that comparison to make some really meaningful connections and learning along the way. It will help ensure that your actions are aligned with the priorities that you've established for your business. And it will also give your team a clear understanding of where the business is headed and help them see the path that you've laid out as well. So when we talk about budgeting is typically a 12-month action plan for your business. So this is your shorter term planning, and it's usually done annually in conjunction with your fiscal year. So during your budgeting, you will determine what you expect to happen over the coming 12-month period, as far as revenues and the planned costs associated with earning those revenues, for the operational activities that are coming down the road. During the budgeting process, you will, sorry, I'm getting ahead of myself in my notes here. Once you're done building out that budget, it then becomes your benchmark. So it becomes your set of goals that you are going to compare against what actually happens over the next 12 months. Generally, once that budget is established, it is set, and it's not a living, growing thing that you change as things inevitably change throughout the year. You're just going to use it as that benchmark to compare against what actually happens and have discussions, conversation, and learning each month along the way. So here's an example of an annual budget that has been established for our sample company David's Bakery. So this is a really high level example of a budget. As you can see, we've just got revenue, cost of sales, and expenses on one line item. So normally you're going to be looking at something much more detailed than this, but this is just a really high level example for us to go through today. So like I said, once that budget is established, we can use it as a benchmark to monitor against what really happens each month. As you can see here, David has planned for just over $1.4 million in gross revenues for the year and gross profit of just over $608,000. Fast forward to the end of the first quarter, and it's now really valuable to spend some time looking at what they thought would happen versus what actually happened. So looking at the very simple profit and loss statement we have here, we can see that David had planned to have gross profits of just over 134,000. He really only has gross profits of just about 39,000. So at that point, we can take a step back and kind of think, what happened? And have a conversation with David about the why behind it. It will allow him now to have those conversations and think about it and think about what he's going to do going forward in quarter 2 and quarter 3, rather than waiting until the end of the year to see, oh, my profits weren't as big as I thought they were going to be. And now it's kind of too late to do anything about that. So we can see that David's revenues for quarter 1 came in slightly under budget. So he budgeted 334,000. His revenues were only 309,000. So not a huge variance there, a little bit down, but not drastically. The more drastic change when we look at the budget versus actual is in the cost of sales. So he budgeted 200,000 for cost of sales, and his real cost of sales was up at over 270. So that is the piece of the puzzle that has ground down his profits. His cost of sale is increased 34% over what was expected. And when we have a conversation with David, he says, yeah, the cost of my bakery, cost of food has increased drastically over what I expected it to be. So at that point, we have a conversation about, do you expect, is that just a blip? Did something happen in the first quarter that drove the price of flour through the roof, and you're expecting it to come back down? Or are you expecting that this will continue for the rest of your fiscal year? David is the one that knows his business the best, and he indicates that sadly, there's no error. The cost of the raw materials has significantly increased since the budget was set back in the fall, with the rising cost of food products. So knowing this now is really valuable. He knows that he's going to be dealing with this more on a permanent scenario. The budget almost goes out the window at that point because things have drastically changed since what he set it at. But it's better to know that now than to know it months down the road when he hasn't looked at his numbers. David can now also take a glimpse into the future of his business. So he can use the budget that he's set. So kind of rewinding those assumptions, say he says, no, it was a blip. Something happened in quarter 1 that drove my costs way up, but I expect that the rest of the year is really going to roll out very similar to what I had originally planned. He can now use that information to adjust his expectations for the year using the budget that he's built for the rest of the year, adjusted for what really happened in the first quarter. So we can see here that he's planned for gross profits ending just above the $600,000 mark, but because the first quarter was not what he expected it to be, he's got to adjust his expectations now, and he's seeing that he'll end the year more in that $513,000 range. Forecasting is a really similar activity to budgeting, but it generally encompasses a longer time frame. So forecasting is generally done on a 3 to 5 year basis. Generally, forecasting is also done more than just your profit and loss statement. So we're considering here more than just revenue and expenses, but we're going to build out the effect of all of those activities on also the balance sheet and the statement of cash flows. So that's what people are referring to when they say three-way reporting. It's forecasting for all three of your financial statements. A forecast is really a living document. So where the budget kind of gets set once a year and you're comparing actual to that set expectation, a budget is going to be more of a living, or a forecast is going to be more of a living document that you are, discussing with. If it's you preparing the forecasting, you're kind of doing that internally, discussing it with yourself and thinking, what do I want to change over the next coming months? So in our example, going back to our bakery, where David said, no, the cost of our flour has permanently increased. We need to now adjust our expectations going forward. So forecasting would allow for that adjustment so that you're building a living model that is basically going to become somewhat of a crystal ball that you can look into and figure out what's going to happen in the future. It's also possible to run more than one model at a time with forecasting. So you could do, a best case scenario and a worst case scenario so that you can see kind of what the difference is there and maybe a most likely in the middle, right? And plan that out that way. Forecasting will allow you to be much more strategic about the decisions because you'll have a bit of a crystal ball to see into the future, allowing you to kind of use that to make the best decisions possible for your business. So looking at this forecast report for David's Bakery, we can see the effect on gross profit that some of these decisions that he's contemplating is going to make. David is thinking about starting an advertising campaign beginning in April. He's got really lofty dreams that advertising campaign is going to bring in an additional $8,000 in revenue per month. He's also considering leasing some new kitchen equipment starting in May. And he thinks that will allow him to produce some of his own raw ingredients and help lower the cost of his inputs, saving him about $10,000 a month in his cost of goods. And he's planning on hiring a new delivery driver in the early summer, which will drive sales further upwards. We now have the ability to play with the timing of each of these decisions and see the effect on the gross profits directly month by month. With the plan in place, David has his gross profit is expected to increase from $590,000 at the end of the year to just over $737,000 by the end. Ooh. So now we can compare what the gross profits would look like into the future. So the green line is kind of what will happen with all of those plans in place. And the purple line is what would happen if he didn't implement any of those changes to his business. So he can see what that's going to look like through the future. We can also look at the projected total assets over the next few quarters under each scenario as well. One of the main benefits of building out a three-way forecasting model is that it allows you to plan for fluctuations in cash flow and be prepared for cash shortfalls or cash surpluses ahead of time. So planning for cash flows can be, in lots of cases, even more important than planning for profits. A business can be profitable and still not have enough cash in the bank to pay their obligations on time if they're short on working capital. So by thinking about how much of your revenue and expenses will be collected or paid immediately versus how much will run through accounts receivable and accounts payable and age over time, you can extend that planning to really forecast how much cash will be available to you and your business at different points in time. This will allow you to spot trends and make decisions about where to focus your collections efforts, when the best time is to be making larger payments, and when you may be able to arrange financing to bridge those short-term cash shortages. Here we can see with the plans currently in place, David's cash is projected to grow quite significantly to over $400,000 by the end of the year. And once David knows this, he can start to make plans for what he's going to do with that excess cash to make it work for him rather than just sitting around in his checking account not earning any interest. He can plan, maybe he wants to buy some new equipment with that excess in cash. Maybe he wants to invest it in a meaningful way. And of course, vice versa. If the projection was going the other way and he could see maybe, things go out until the fall where we dip and then come back up, he knows, okay, I'm going to have a cash crunch in the fall and I need to plan for that. Maybe I need to go talk to the bank. Better to be talking to the bank when times are good and not running to them at the 11th hour trying to get some bridge financing put in place. So as you can see, building your business roadmap is not a one-time activity. It's really more of a continuous cycle where change decisions can lead to many, many more questions. But once you're finished building out the initial plan, it's important to follow up on a regular basis and assess actual against what the plan was. What can you learn from that? And then repeat the process at least annually to update your expectations and forecast out going forward. So my recommendation is to review your budget to actual reports at least quarterly, and then adjust your future plans accordingly. Best practice probably would be monthly. Some people even do it up to weekly. Weekly is a lot of work. You would need it's a full-time job at that point, so you would need someone in-house to do that for you. But that will help getting into that regular routine. Whatever the right routine is for you is the most important thing. We always like to talk here about the tools and what would you use to do this type of work. So of course, the old standby and powerful tool is Excel or Google Sheets. So we cannot, that's the probably most commonly used tool for these types of activities. Most business people, most business owners have an understanding of Excel and how to use it. It's a very flexible tool. It's a very powerful tool. You can build out formulas to project forward. The downfall when we're talking about using Excel is, of course, user error. And I attended a seminar last year where they said that there was a study actually done, and most Excel spreadsheets, the average number of errors they have in them is 4. So because those formulas are really built by human beings that are prone to making errors, there is usually going to be an error, and it becomes very the person that built the spreadsheet is the only one that understands how to use it, and so it's not really translatable across a team as much. So there are many, many options, of course, for apps out there that will help you in building out forecasts and budgets. The one that we use and the one that generated the reports that you saw today in my presentation is called Fathom. It's a very good tool. It's fairly user-friendly. It's quite user-friendly in the realm of these type of apps that are out there. But like I said, there's many other options. Fathom walks a really great line between being user-friendly enough and at the right level of detail without going down the rabbit hole, so to speak, of being too detailed and being a time suck. But yeah, always happy to give guidance on apps that you're considering. We have experience with many of them. And if not experience, we probably know somebody that does. So we're always happy to have those conversations with you. So how can KWB and On-Site Advisory help you here? So we can provide, like I said, our guidance, our expertise in this area, and our experience. We can lend a little bit of independence to the discussion. So some of this work can be difficult to do when you are in the weeds, so to speak, of your business. You are so intimate with all of the details. It's hard for business owners often to take a step back and look at things from a higher level. So we can provide a little bit of that independence into the process, and ask some questions that might get you thinking in a different direction. And that can be really valuable. We can also offer a level of accountability. So when we found that when we're working with clients on this type of work, we just hold them a little bit accountable to taking that time to step back and work on their business, as opposed to getting really wound up in the day-to-day working in their business. And that helps a lot of them to make some progress in this area. And then, of course, we can help you take action. We can, similar to what we do at the bookkeeping level, we can do it for you. We can work with you to help you do it, or we can work with your team to help be that voice of reason and that voice of independence. So we can work with you at any level.